Good day, guys. Today it's a weekend, but in preparation for the coming week, I would like us to look at the US dollar Japanese yen pair and then see what we can expect in the coming week. So, what we notice here is that we have an uptrend that is now turning into a downtrend. These are some of the things that we focus on if you are taking our signals from the Pip Skills Telegram or any of our channels or websites. So we're looking at the areas where the market goes in one direction and then it creates a curve, and then it goes in one direction and then it creates a curve. So this is where we actually look for our starting point for the trading opportunities. So what exactly do we look for in these areas? So the first thing that we look for in these areas is that we look for a certain trend that seems to be complete. In this case, we would look at this point and this point, and then we would assume that this trend is complete because it started here and it seems to be ending here. And this is not a definite case, which means it's not always the case. The trend might do a pullback like this and then actually continue up, but it would be having its own reason. But for our trading signals, this is one of the things that we look at. So from this trend, what do? We try and actually map our trend so that we can see our pullbacks and the push-ups and the pullbacks. And depending on how visible the chart is at the time frame, we try and do it at a higher time frame. But you can do it even on the 4 hours if you can see that. So if we are going to chart that, I would say that my move has started here. This is the 4 hour, and then I have this. I have a pullback to here. I have this peak, I have a pullback to here, and then I have this as the last peak. And then from there, what I would look for is that I would put a line on my last retracement of the upward move. So this is the last retracement of the upward move. So I would put a line here. When I have this line here, and then I would expect that if we have a true reversal, then the market on the downside would actually break this line that we have here. When we break that line, then we assume that we have a true reversal. But there are other things that we look for to actually confirm that this may potentially be a true reversal, but they don't really happen all the time. For example, in most cases, the market will do something like this. It will go up, do the pullback, up, up. And then when it starts to reverse, it will actually come down, and before it reaches this point, it will take a hit here and then try to pull back. The pullback would usually not go anywhere above this point. So it will pull back like this, as if it's trying to test this area. It will pull back like this before it actually makes the break of this area down here. And this is where we start to expect the market to actually come back to this area before it goes all the way down. So if we're looking at that from the chart itself, so how does that look? So when we're looking at that from the chart itself, we know that our market has pulled all the way up. Now we have our last point, our last pullback, which is here, and then we would have some kind of a pull down, and then before the break of this area, we will have some kind of a pullback or a retracement or a consolidation. This is the area that we are looking at here. And then from there, the market will break this area. After breaking this area, the market is going to attempt to come back to that last pullback or retracement, which is this area, before it continues to go down. So this is the trading opportunity that we are looking for in the coming days. However, if we go back and look at the chart from this direction, there is a possibility that the market is also trying to come back to something down here. And that is if we look at another curve. So if we were to look at a curve that happened before this curve that we are working on this curve at the moment. So the one that happened before that is this curve that is going up. So if we go into that area using the same logic, we would have a situation where we have our market starting from, if I can remove all drawings, we have our market that is starting from this point. Let me do that. We have a market that is starting from this point, dropping to here, pulling back up, dropping to here, pulling back up, and dropping to this as the last point, right? Now, just to make this a little bit visible, let me put it back on the 1 hour chart. Okay. Now, if we are looking at that on the 1 hour chart, we realize that we have this area here as our last pullback before we hit the last lowest point. So when we break this area, we expect the market to come back to a consolidation that has happened before that area, and our consolidation would be this area around here. So the market will in the future attempt to come back and touch that area. Now, not forgetting that right now we have just also confirmed that this area here that we have broken, as we were looking at it on the 4 hour chart, this is the area we are also expecting to come back from in the short term. So when we look at the entire move, we have these two. These are the two most recent area of interest for our pair. So what the pair would do now, there are two options, and either one can happen first. So the market will either retrace back to this point, and then when it does that, we get our sell position, and our stop losses would be at this point. The reason why our stop losses is at this point is because the market is trying to come to this point so that it can liquidate the area and actually push back up, right? However, that doesn't mean that this is how this is going to happen now. What can potentially happen is that the market can actually continue first to come to this point. And if it comes to this point, after liquidating this area and getting momentum to go up, it will come up and try to liquidate this point as well. And after liquidating this point, it might continue down. So you have two situations. If it liquidates the top area first and then comes down and liquidates the bottom area second, it is most likely to continue up. But if it liquidates the bottom area first and then liquidate the top area second, it is most likely going to continue down, because the market, it will be using the most recent liquidation, the most recent momentum that it got from the market to continue its push. So if the last area it touches is this one, from this point it gets a momentum to go up. If the last area it touches is the top one, it's getting its last momentum from a high area, therefore it will push all the way down. So these are the positions that we will be looking for on the dollar yen for this coming week, and hopefully would make some good trades. Nothing that we say here, it's an entire confirmation. The market can still come here and touch this as the last area, come here, make some kind of consolidations, or come pull back down just for a short period and still go up. However, we are working on a probability basis. This is what happens most of the times, but most of the times is not all the times. So however, we are hoping we will open with some good trades during the week and get to participate in those trades. Thanks.